Good morning. It's Tuesday, May 7th, 2024. It's about 10:45 a.m. on the East Coast. And this is Robert Sin at CEO Technician on X, at Goldfinger on co.ca, and you're watching Goldfinger Capital on YouTube. These weekly videos are always a test for me to try to condense what I want to talk about in an hour or less. And sometimes I also, like Friday, I was interviewed by Palisades Gold Radio, Tom Bodrovics, and got through a lot of talking points in that conversation that you can find on my Substack. Um, but at some point, I just have to say, okay, that's enough. Stop adding more tabs and just do it. And there was always another time, right? So that's kind of what happened here this morning. Just kept adding tabs and then like, come on now, this video is going to be over an hour. Just make it, get on to the next thing. So here we are, weekly talking points, May 7th, 2024. I'm doing this Tuesday morning because there was a lot going on yesterday morning. I did a couple of blog posts and there was just a lot happening. So I figured let's just wait till Tuesday. I do want to say I'll be speaking on Friday in Vancouver. MIF, the Metals Investor Forum, is actually going to be held at the Paradox Hotel in Vancouver. The hotel they're normally at, doing more renovations. Things take longer, especially in Canada with union labor. Everything takes longer and costs more. Oh, the joys of socialism. Um, so we're at the Paradox Hotel, formerly the Trump Hotel. Just so you know, it's downtown Vancouver. Kind of an interesting name, Paradox. I wonder where they came up with that from. Anyway, let's get to it. Again, if you like these videos, if you find value in my content, please hit the like button and subscribe. Share it with your friends so we can get um, this value added content out to as big of an audience as possible. So the U.S. economy, inflation is showing signs of rebounding in the recent data, but big but there are signs of weakness starting to come about. Last Friday's non-farm payrolls missed, and the prior months, February and March, were revised lower. And also, I think this is sort of a leading indicator. Hiring intentions are dropping significantly. So a lot of employers are, reducing their hiring plans and taking job offerings down. A year ago, there were a lot of jobs available, a lot of job postings. In fact, it was like a record amount in early 2023. And now we're seeing the rebalancing happen. Okay. And um, one brokerage firm analyst actually expects a negative non-farm payrolls print in the next 2 to 3 months. So later this summer, they're seeing signs that it's not going to be a 200,000 payrolls print like we have almost every month so far this year. Last um, Friday was 175,000. Well, they think it's dropping under zero to actually negative number this summer. So if that is going to happen, that will probably be very bullish for gold, and that will get the Fed to cut. Regardless of whatever inflation being sticky above 3%, if the labor market really weakens sharply, that will get the Fed to cut. So everybody who's been calling for Fed cuts in the first half of 2024 has been wrong, early or wrong, but they may not be wrong for long. I mean, September is a real possibility, although right now it's definitely far from a certainty. I think September is actually a coin flip if you look at Fed funds futures markets. This is an interesting chart from Bank of America showing uh, The new orders, sort of a leading indicator of the ISM manufacturing PMI, has rolled over and is turning negative. So this is a leading indicator um, of the economy, new orders, and inventories. So the new orders are becoming less than the inventories. So that's showing you slowing down in economic activity and growth. So let's keep an eye on that, but that would align with the idea that the labor market's going to cool off significantly more over the next few months. Um, Morgan Stanley out with a note this morning, actually saying that the upswing in inflation in the first quarter 2024 um, is going to be followed by a sharp downswing. That the leading indicators are pointing to even weaker rents in the second half of 2024. And basically, the Q1 upside was all seasonal in nature, and that suggests that there will be payback in the second half of the year. You can see in this chart that they are seeing inflation getting to target by year end and then staying at target throughout 2025. So if this chart, if this forecast is correct, then we are going to get a significant amount of Fed cuts later this year and throughout 2025. Because if the Fed is at 5.5 and core PCE is stable at 2%, then the Fed is way too tight, where you could easily see 200 basis points of cuts by the end of 2025. Okay. And this is just, I talk about this stuff because it's setting the stage. It gives context to market action, but I don't feel any real edge in forecasting the U.S. economy or the global economy. Okay, it's just it helps to add context to the data we receive and market moves that take place. Powell spoke last Wednesday. Fed announcement was basically nothing. The only real new thing was they're going to start tapering quantitative tightening. Although, um, he did say a lot. He just danced on both sides. I mean, it's clear that the Fed would like to cut if it had the cover to cut. If inflation really cooled off further, the Fed would like to ease. But based upon that press conference um, last week. Basically, the only thing he said was he doesn't think hikes are likely. So, the bar for the Fed to hike further, to hike again, is very, very high. Okay. Inflation would really have to trend higher um, than it is today and do that for several more months. And then that would just be very messy. But that is definitely not the base case. That is the unlikely outcome. But basically, the Fed is doing nothing, and you could probably expect them to stay on hold again for another 3 or 4 months. And then, if there is going to be a cut, it's been pushed out to September now. And again, that is a coin flip at this point. But the market's already priced that in. The market has factored in the fact that there's going to be fewer rate cuts in 2024. In fact, we were down to pricing in only one rate cut just a couple weeks ago. Now we're pricing in maybe two rate cuts at the end of the year. I want to go back to Zoltan Pozsar. We haven't heard much from Zoltan because he's working at his own private firm now, and his research, he's charging a lot for it, and it's not getting out there to the broader investing audience like it used to back in 2022. But I think a lot of his writing from 2022 and early 2023 is still very valuable and still very relevant to today. And I just want to give you a little secret sauce to my investment, um, basically themes, the framework that I use in my investment ideas and to construct portfolios. And that is really, I just use these four concepts from Zoltan Pozsar that he wrote in a research report. I believe it was late 2022. Rearm, restock, reshore, and rewire. This is the theme of the rest of the 2020. So here we are, May 7th, 2024. So we have another 5 or 6 years, I believe, very focused on these themes. And these themes are going to create trends. It's already starting to, form trends in financial markets, but these trends are only going to get stronger, between now and 2030. Okay. So this is a key tenet of my market outlook, looking out 5, 6 years from now. And you'll notice there's a common thread on all of the four: rearm, restock, reshore, rewire, and that is metals. We need metals to rearm, to restock our supplies of commodities. We need to mine and acquire more metals. It could also be grains, could also be barrels of oil or natural gas, but metals is the foremost form of restocking. Reshoring: everything we build, everything we consume, everything we create comes from metals that we mine, and we need to reshore. We can't count on metals coming from China or Southeast Asia or Russia. We cannot count on that anymore. We have to reshore, onshore it. Friendly countries and, within our own sovereign borders. So if I'm talking as an American in the US, we need to mine it in the good old USA and rewire energy transition. So AI data centers, um, and just the upgrading and refurbishment of US power infrastructure that has to happen. It's long overdue. We're going to be rewiring. We're going to be rewiring. And those AI data centers require an enormous amount of copper and some silver too. Um, so this is the foundation of how I view the world from an investment standpoint. It's not more complex than that. I just gave away my secret sauce. I mean, it's not a secret. He wrote this. This is very well understood by many investors, but it's a consistent theme. And I think that if you use this to inform your investment choices, your investment ideas, it will be quite a value add over the next 5 to 6 years and perhaps well past 2030. Okay. World War III has started. I wrote this bullet point with not really a clear intention of what I wanted to talk about, but I just want to say that the last month, if I had any questions, let's say at the end of 2023, if we are in World War III or not, the last month and everything I've seen out there in the world over the last month has made it very clear to me that there's no questions. World War III has started, but World War III doesn't look like World War I or World War II. It looks different because of technology, the way the globe has shape shifted over time, um, and the adversaries are different. Um, but I mean, it's very clear that you have a group of countries whose main goal is to usurp the U.S. dominance and the U.S. as a superpower, and to also knock down the dollar as a reserve currency. We know who those countries are. China, Russia, to some extent, even countries like Turkey. Even though Turkey will play as a NATO country, will play all sides for their own benefit. Turkey is very much not an ally of the West or the U.S. Right? Um, and this conflict looks much different than World War II. In World War II, you had very clearly, defined battle lines, right? You had fronts, um, and we knew the Nazis were the enemy, right? If you were not a Nazi, the Nazis were your enemy, right? It's pretty clear. It was the world against the Nazis and obviously the Japanese, but I'm trying to really simplify it. This one is much more complicated because we have our enemies living, like among us in 2024. I'm not going to delve into that any further than to just say that. And I think those of you who have your eyes wide open and you see the world pretty clearly know what I'm talking about, right? So this is much more complicated than 1941, 1942. Of course, um, also, it's not always a shooting war. It's a cyber war. Um, it's a war of propaganda in the media. Um, and there are those who act like they are our allies who are not at all, right? Um, so anyway, World War III has started, and if we just use that idea that we are at war and go back to these four themes, we need more metals, whether it's copper, tungsten, zinc, molybdenum for steel making, even thermal coal for steel making, uranium for baseload power. We need metals. We need more and more metals. So copper, this is a note from Goldman Sachs, and basically it's hard to read here, but I just threw it up there so I would, remember to talk about it. It's just very simple that we've had um, a move up in anticipation of a further deficit in the middle of this year, right? So the markets do what they do. They price things in ahead of time. They move up ahead of time. Copper's had a very big run from 375 in January to 460. That's an enormous move in copper. And it sets the stage for maybe a little bit of a pullback or cooling off in the near term, let's say in May and June. But bigger picture, and this is the point of this note from Goldman Sachs, uh, bigger picture, Goldman sees copper going above $5 a pound by year end, and it sees copper above $7 a pound or near $7 a pound in 2025. So if this forecast is right or even mostly right, it has massive implications for uh, financial markets and for how an investor should position themselves. I mean, even today, let's just say round number, we're at 450 copper. If copper is going above $5 a pound by year end, that's a more than 10% move. That's a very big move that will have big implications for copper mining companies like Freeport McMoran or Southern Copper. It also could have huge implications for copper juniors who are exploring for and trying to find more copper in the valuations that they may receive from the market by year end, right? And then certainly $7 a pound in 2025. I mean, oh my God. So 450 to $7, that is a mammoth move. That is a total sea change in terms of copper pricing and how um, copper companies, like publicly traded copper companies, are going to be valued over the next year. There is a tremendous opportunity for an upward re-rating in the copper space. And those who are no stranger to these videos and my commentary will know that I love copper, and I've talked a lot about whether it's Freeport Mac, Moran, or Southern Copper, or copper juniors like Hercules Silver, like American Eagle Gold. It's funny how both those companies have silver and gold in their names, but they're both focused on copper. Um, and many others, whether it's core assets or VR resources. I could go on, right? Intrepid Metals. Um, there is a tremendous opportunity here at hand. And while, there have been some moves higher in the last couple of months among copper juniors, this party is just getting started. And if Goldman is right on here, there's going to be a lot more upside, a lot more opportunities over the next year. I just want to say just quickly about the presidential election. Um, both what Biden and Trump have pro-inflationary policy. And I think actually Trump would be even more bullish for gold because he actually wants to cut taxes. As absurd as that thought is with our $2 trillion annual deficits and $34 trillion in total debt, and including another 65 trillion in unfunded liabilities, Trump wants to cut taxes. And Trump is a maniac and he will do whatever the hell he wants to do. Okay, so I think Biden is bullish for gold. I think it's going to be more of the same, from him. Just look at gold's um, trading pattern over the last couple of years. It's gone from 1625 to 2450. So Biden is certainly not bearish for gold, but I think Trump could be actually even more bullish for gold. And I read something yesterday that uh, you know people who are bulls on crypto and Bitcoin think that Trump will be bullish for their space, and that Bitcoin, like as we get closer to the election, if it's looking like Trump is a clear favorite, they expect Bitcoin to hit 100,000 because he'll get rid of Gary Gensler. Um, I don't know. I mean, that seems like, wishful thinking. I think Trump could just as easily ban Bitcoin as he could be bullish for, Bitcoin. I think he's pretty unpredictable in some ways. But who knows? I mean, if he's going to cut taxes and run an even bigger budget deficit as president, then you probably want to have some Bitcoin. Definitely want to have plenty of gold and silver. Um, you know, OIH. So let's just here. Let me go through some charts here. So we're above 5,200 in S&P futures. Gold is meandering around 2320s. Those who've been watching my videos for at least the last month know that I called the peak on the morning of April 12th, Friday, April 12th. I called it in real time. You can look through my YouTube video history and find that video where I was saying we are in for a correction now, literally as this candlestick was printing on April 12th. So we're still in this corrective phase. This is really low energy, choppy trading here this week in gold. Not a surprise. I think we're still just biding our time and building up a base for the next leg higher. And until we break under this gold line here, 2286, that's going to be my outlook on gold. Just let it be boring for a little while. We had a very exciting run from March 25th to April 12th. Now let's just correct and set the stage for the next move higher. With equities, I mean, this is a tremendous breath thrust. And this guy pointed it out. I mean, this is from 2022, but this is the same breath thrust that we've had this week in equities. It's an extremely bullish omen for stocks. So, who am I to overthink it? I mean, melt up, baby, melt up. I mean, if this stuff is correct at the start of my video that the leading indicators are rolling over and the labor market's about to print negative non-farm payrolls in a few months, it's going to give the Fed plenty of room to cut. And what's bad for the labor market's good for the stock market. I don't know. Whatever. Melt up. It's funny, like when you become I don't know, what's the way to say it? The more experienced I get as a market participant, as a trader, and the more I laugh at the rationale for why markets should do certain things, But um, hey, if the Fed's going to be cutting interest rates and the government's going to be uh, making a $2 trillion budget deficit, and we're going to have, election year pandering over the next 6 months, then why can't stocks melt up and make a new high? There's no point in overthinking this stuff and trying to be bearish just for the sake of being bearish. Melt up during election year 2024 in the midst of World War III, right? It's hilarious. You just gotta love it. Energy. So OIH. So I'm long this. And I want to make a point about this chart. So I've been talking about the OIH for better part of a month now. It came down to my level at 320. I bought it. It was looking great. And then we got smacked in the mouth last week, this breakdown. And I did not get shaken out of the trade because I'll tell you, my stop level was 305. I clearly identified 305 as major support on this chart. And I know that looked really bad last week. I mean, it looked, what was it, Wednesday when it got down under 310? That looked really bad. And most traders would get stopped out there. They would just say, "Oh, it broke down from the ascending triangle. This isn't a free fall. I'm out." Not me, because I clearly identify where my stop loss is, where my risk tolerance is on a trade before I press the buy button. I don't make emotional decisions in the middle of a trade because I know that's how I make really bad decisions in markets and how I lose money. I lose more money over time by trading on emotions and on whim. So when I got in here, I knew where my cry uncle point was, and we didn't get there. We didn't get there last week. As bad as it looked, and I think I made a tweet saying I don't love this anymore. This looks bad, but I cannot. I can say I don't love it or I don't like it, and I could still be long it because that's my plan, right? And that's how real traders think and how real traders trade. So let's get rid of some tabs here. Melt up, baby. Um, Get rid of OIH. We're still long this one, and I'm in the green. I'm in the green this morning. Knock on wood. I'm in the green. But I'm pretty bullish on oil here, quite frankly. I know whatever Saudis are going to kiss up and make a security deal with Biden. I mean, at least that's the speculation that's been weighing on the oil price. But I don't buy it for a second. And we're still in World War III. So I want to own energy. Like I want to own oil in World War III. I want to own gold in World War III, right? I made a blog post on Sunday about this monthly candlestick in gold and how it has this long upper wick, and some people are going to say it's bearish. It's one candlestick, and even though it's a monthly candlestick, it's one candlestick, and the bigger picture, longer term patterns and trend have way more value, way more weight than a single monthly candlestick. So don't overthink it. As long as we're above this blue breakout line, don't overthink it. And again, May could be a very boring month in gold, and we could just continue to consolidate and build energy for a bigger move the next rally later in the summer. Okay. Silver, it's an uptrend, right? We had a correction that was very much needed after rallying from 22 to 30 in virtually a straight line from February to April. We've had a correction. Standard stuff, still bullish. GDX, gold miners. This is monthly, and this is a big pattern that has formed on the monthly. I mean, this has been forming since 2020, so this is a 5-year pattern. When GDX does break out above this neckline, let's call it 36 as the breakout level. Oh my, that is going to be a move. That is going to trigger a move. Measured move on this pattern is 50 on the GDX. 50. So a 50% rally, there's the upside potential, 50% potential upside in the gold mining sector overall, right? And so if that move does play out, and let's say it could play out over a 6 or 7 month period, if it's a 50% move in the sector, that means that individual companies companies and juniors especially will have 200 or 300% moves, maybe even more during that time frame. So put that into perspective. This is a very bullish setup here for the gold miners. And this pattern doesn't really get invalidated until this breaks back under 30, right? So, um, yeah, it looks pretty good to me. IAG, so I am gold, no stranger to these videos. IAG is no stranger to people who watch these videos. This has been one of my best ideas of the last year, and it continues to trade very well. Um, this pattern, what is it called? You could call it, you could draw a little diamond pattern. You could just call it a bull flag. You could even try to call it a pennant, whatever. It's a consolidation, high and tight consolidation at the highs. Very, very bullish. And notice the textbook volume profile. So it has price trade sideways, marking time. Volume trails off, and volume has gone very light here this week. This is now in the sweet spot. So I expect this pattern to resolve this week. Okay. And I gotta say 60-40 or 65-35, it's gonna resolve higher. Cameco, so uranium. Let's go back to Zoltan Pozsar, right? Zoltan Pozsar. Rearm, restock, reshore, rewire. Uranium meets all of those themes as well. Base load power, the most cost effective and efficient form of energy in the world, known to mankind as nuclear energy. And look at uranium or Cameco breaking out, making new highs here this morning. There's a lot of noise in this chart. There's been a lot of up and down, a lot of up and down. But zoom it out to a weekly, like look at the big picture here. Look at that uptrend. It's a thing of beauty. So it's just been consolidating here in early 2024, but the big picture trend has not changed one bit, right? Upgraded by Goldman Sachs and RBC in the last week. And Goldman says we continue to see CCJ as a key means of getting exposure to the entire value chain of uranium. That's pretty bullish talk there from Goldman, and the uranium sector is responding this week. Looks absolutely fantastic. Next gen now up to $12 a share on the Toronto, $6.5 billion market cap for next gen. That is lofty. Lithium. Patriot Battery Metals had some good drill holes out, and this is up 10.4% today. Just subtly, Patriot Battery Metals has put in a higher low in April. So this was a complete washout capitulation low in February, and it looks like it just put in a higher low. So, this is how bear market bottoms are formed. You have to make a higher low at some point, and then zoom it out big picture. Look at the weekly 3-year chart, put some things into perspective, right? So this has been in a correction since mid 2023, but could it be preparing to begin its next wave higher, its next move? Probably not quite of this magnitude, but could it make a new high? It's possible. It's possible. All right. So where are we? Junior mining. Boom. I'm moving along fast this morning. So this is it. I'm just going to talk junior mining and give you a little preview of my MIF presentation. So we start with Hercules Silver. So what did Hercules announce yesterday morning? It has commenced its phase 3 drill program in Western Idaho. 3 core rigs have arrived, and 2 of them have been there since April 22nd. So this is an example. Like, not every company puts out a news release on the exact day that drilling begins. In fact, most often companies will wait for drilling to be a week or so into it to make sure that everything is going smoothly before they actually put out the news that the drill program has commenced. So this is a very professionally done piece of news from Hercules, and I like the fact that they started early and they waited to make sure everything was going according to plan before they actually announced it to the market, right? So now they have 3 rigs there. A third rig came last week, and this is the strongest one. So the one that came last week has 2,000, has the effective depth capacity of 2,000 meters. Wow, very impressive. Um, and they just showed us where the rigs are. So this was rig. So this is hole one. This is hole two, and then the most powerful rig was put in the middle of the 2 holes, hole three. Now, where is this? Okay, so those of us who know the property really well know exactly where this is. But here's hole 2305. And we know that this area is called Frog Pond. Okay, it's not shown in this map, but this is Frog Pond. And up here is Hercules Added. So they are drilling basically one of the rigs is at Hercules Added. Um, and then you have Hercules Ridge, and then you have Great Creek up here, right? But basically, these are step outs to the northwest and north of hole 2305 last year. So they're testing to the west and to the north of hole 2305, which was last year's best hole. Obviously, it was the discovery hole announced on October 10th, 185 meters with 0.84% copper and 111 ppm moly, with that enrichment layer of 45 meters of 1.94% copper, right? So they are stepping out, um, to the to the west and to the north, which is basically looking at this little arrow here, increasing copper grade. So they're following the increasing copper grades of 2023 drilling to the northwest. And I know that they talked a lot about Belmont a few weeks ago, and Belmont is definitely on the agenda for this year, but they've started in the area of the project where they have the most information, right? And really, both Belmont and Great Creek are very high priority targets. So they're just starting up here, and they'll work their way down to Belmont later in the program. And you can read the news for yourself. I'm not going to say the whole thing, but they basically said, look, the drill program is not set in stone, far from it. And we're going to make our, you know, choices of where to drill next based upon what we're seeing in the holes that we're drilling, right? So they're going to learn as they go. And I mean, it's pretty clear. They're looking in the first 3 holes, they're looking to hit that enrichment blanket that they found in hole 2305, and they're looking to follow up on that. So if one of these 3 or 2 of these 3 hit what they want to hit, which is that 2% copper layer, that bornite enrichment layer, then that's clearly going to be their focus. Why wouldn't they focus on the areas where they're getting the highest grades in the lower plate, right? There's no reason to go stepping down here where they have less information, right? Start where you know the most, where you have the highest probability of success, and then later in the program, I mean, they're probably going to be drilling for the rest of the year, quite frankly. Okay, I mean, I know they didn't say that explicitly, but I have a feeling that this is going to go. They started drilling, and they're not going to stop for a long time, right? So there's plenty of time to test Belmont, to test the Big Cut Scarn, to test other targets that we may not even know about right now, right? And they're also attending a conference. So they're attending the Canaccord conference, which is starting today, right? So Chris Paul will be in California at the Canaccord conference. I wonder if we'll hear something from that. I have no idea, right? And people ask me, so when are you going to talk to Chris? I don't know. We'll see. We'll see when he wants to talk to me. Um, but this is a great news release, right? I was really happy with it. And then looking back here, the last week, this wasn't like the commencement of drilling or new 3D IP, but this is a great news release. Charlie Greig, who's involved with another company that I own, which is American Eagle Gold. Charlie Greig is a great guy, good geologist, and he's been appointed technical advisor to the company. Great addition, right? So, obviously, it's not necessarily going to move the share price, but they're building out a world-class team at Hercules, right? So this is they're doing all the right things as far as I can tell. And I wrote this yesterday. There's some things in my Substack. This is a paid article on my Substack. You need to sign up for the premium version of my Substack, and I'm not going to just give all the stuff away for free, but there's more in this article, and I'm not going to scroll down to it. But if you want to subscribe and read it, there's some other key details in this article that I was able to glean from the latest presentation that Hercules put on their website. And I also offer some additional insights into the announcement of drilling that we got yesterday. So go ahead and check out my Substack, guys. And yeah, there's a lot of content on here. Also, I had a silver round table with Chen Lin and Outcrop Silver CEO last week. That was pretty cool. And I wrote a free post. There's a lot of free content here too. So even sign up for the free version if you don't want to pay. And then I was interviewed by Palisades Gold Radio. That's up there. Okay, so check out my Substack. Hercules Silver chart, and let me update it. So we're at 89 cents right now, high of 92. So we're just continuing to trade in this range, right? And we're in the middle of the range. Let's say the upper end of the range is 103, the lower end of the range is like 70 cents. So we're sort of in the middle, maybe working our way back towards the upper end of the range, but nothing remarkable yet. Okay. But we have to say a lot of energy has been built up in this range. A lot of energy. And look at the volume by price around this 80 to 85 cent level, right? It's a huge amount of trading volume has been transacted around this, and I think the VWAP, if we actually analyzed it, is 83 cents. The 2024 VWAP is 83 cents. So a lot of shares have traded hands in the 80s, right? So the next move, because all this energy has been built up, the next move is likely to be a powerful move. And obviously, I'd like to see it be an upward move above 103. Okay, but that remains to be seen. But a lot of energy has been built up here between 70 cents and $1. A lot of trading volume. I'm not even sure what the updated volume total is, but it's some ridiculous amount of shares has traded, in this range so far in 2024. So a lot of energy built up. Moving on, American Eagle Gold. So this is another copper porphyry story, not in Idaho, but in BC. Um, and they upsized their private placement to $8.2 million. So if we add in the money they had before they announced the financing, with some warrant, money came in because there were some 30-cent warrants that were out. They've now expired, so that's all done. When this financing closes for 8.2 million, they're going to have like 15 million Canadian in the bank. So they're going to they've put themselves into a position of immense strength where they can expand the drill program. Right now, they've announced 15,000 meters with 2 core rigs. That could grow. Okay, that could very well grow because they have the money the flexibility to expand if they want to, right? Um, and drill. So they've been doing this new IP survey. I think we'll get the results of that in the next couple of weeks. Probably have like another webinar with maybe Charlie and Neil and Tony, and then drilling will commence by the end of this month, right? And they know exactly where the I don't know, first 10 or 12 holes are going to go of this drill program. And clearly, um, the main focus is going to be to drill in this gap zone between the north and the south at NAC. fill this in, right? You can build a lot of tonnage in this area right here. Okay, they can build a lot of tonnage. Then they can test some targets they have to the north, and then they can start maybe working their way over here to the south. But the first order of business is to connect the north and south zone. So we're going to have a lot of news flow, a lot of drill results coming from American Eagle for the rest of the year, and just go through their deck and find the jewel box. All right. So they're in a real position of strength. The chart shows they're in a position of strength. I mean, it's pretty rare for a junior to be at a seasonal lull since January and to basically triple their share price during that time. This is exceptional, and this speaks to the exceptional nature of NAC and the American Eagle Gold team and how well this team has managed to, assemble high quality people and to also tell their story, get the word out to a much broader, you know, investment audience in 2024. So fantastic job by the team. And obviously, the opportunity, some people will say, well, look, isn't the opportunity gone now? Like the stock is 3x since the end of 2023. I would say no, but obviously at 25 cents a share, the downside was probably a bit less than it is at 73 cents a share. But at 25 cents a share, the company didn't have nearly the capital in the treasury that it has today, and they didn't know nearly as much as they do right now about NAC. And it's their much higher level of understanding of the project, where they want to drill next, and the work they've done during the off season that has allowed them to bolster their treasury now to $15 million, right? So they're in a position of great strength now. And in some ways, you might say that the risk is less because they know so much more. I don't know. I mean, there's two sides to the coin. You could look at it both ways. Um, Awale, ARIC on the venture. I haven't talked about this one lately because there's been a lot of stuff going on in the background. They've had a financing open. So the financing will close tomorrow based upon what I understand. That should be a positive for the company. And it should also set the stage for Andrew Chubb, the CEO, to speak publicly and address some of the concerns about the insider sales last month, how the financing came together, why they chose to do the financing, and also just talk about the drilling that's been going on, because that's what's been lost in all this is they've been drilling in Ivory Coast since early April, right? So I tend to view this little consolidation and pullback as an opportunity to buy at a lower share price than the dollar it hit after that incredible hole at Charger that what was it, 32 meters of 46 grams gold. Um, so I view this as an opportunity, but let's see. Let's see Chubb speak and do some interviews, and let's see if they put out some news about the drill program, right? That was an incredible hole. And I don't think it occurred in isolation, right? I think there could be a lot more holes like that one still to come. And then Heliostar this morning. By the way, this company is a sponsor of Goldfinger Capital, and I appreciate their support. Charles Funk is the CEO, very quality CEO. This is a good company with a fully permitted gold mine in Mexico, high grade gold mine, right? And they announced something a bit unique this morning. It's a letter of intent, so it's not set in stone. The papers haven't all been signed. It's not a done deal yet, but it's a letter of intent. So they're working towards this 20 million US gold linked line of credit essentially that will help them to basically access this higher grade core of 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 the Ana Paula project, right? And I'm not showing the maps and everything. You can look at the presentation on your own time. But if you look at the model of the resource, you can see there is this high grade core of the deposit, and they want to tunnel down. So basically, um, this money is going to fund test mining, where they're going to tunnel down to this high grade pocket of the deposit and extract gold that, I don't know, average grade of 8, 10 grams or something, right? Um, and I will allow Charles to tell us more about this in the future, but I find this to be very interesting because instead of going to the market to try and raise this sizable sum of capital, they've gone to private, lenders essentially in New York, okay, which is not exactly the mining capital of the world. So that tells us something about the validation that this project has, this company has, um, and the fact that they have permits, right? So a junior that doesn't have a resource, doesn't have a PA or PFS, and certainly doesn't have permits, cannot do financing deals like this, right? So this is, it speaks to the strength of the project and the strength of the company that they're able to even get the possibility of doing um, basically a debt deal that will be repaid by the gold that they mine, from the deposit. And they're very ambitious. In the CEO quote, he says, "We are excited to advance towards our goal of mining the first gold ounces from Ana Paula in 2025." So, Charles, it's May 2024. That's 18 months away, right? Mining doesn't work that fast normally. So the fact that he's stating this publicly, putting it in company news, speaks to his confidence here. Yeah, and I mean, I love it, and I just hope that they can make it happen, and they can prove the naysayers wrong. Okay, so obviously, the company is a sponsor of Goldfinger Capital, so I could be biased, and I am a shareholder. I'm a shareholder of Hercules, American Eagle, Awale, and Heliostar. So all the companies I talked about here today. And I think we'll leave it there. Oh, hold on. There's one more thing. MIF. So if you're not in Vancouver, I don't expect everybody to be in Vancouver Friday, but tune in. Tune in to the webcast. I'll be speaking at MIF. And I think this is the title of my presentation. This ain't checkers, it's chess. This is a kind of play on the Training Day movie. And I know that Denzel said it a little differently, but I figured I wouldn't make swear words in a MIF presentation. But I don't know. I'm open to feedback otherwise. And this will probably be the only metals mining, junior mining presentation you'll ever see with a chessboard. Can you solve this checkmate? Thanks for tuning in, guys. I really appreciate your time and attention, feedback, the comments that you post on my videos. And I wish you a powerful trading week. And until next time, see ya.